Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, thank you as always for making time.
Happy to be here.
Well, stocks on Wall Street advanced again overnight, the Nasdaq for another record high. It seems that was in part on hope that lawmakers will finally reach a deal on the new stimulus bill. What's the story in the global markets?
Okay, well, the U.S. stock market is doing unusually well, and there seems to be somewhat of a separation between the real economy and the stock market. The separation seems to be there for a while. If you look at the actual state of the United States economy, if you look at their second quarter earnings report, they're not doing very well, though they beat the expectations. The total earnings are down substantially from second quarter last year. And the coronavirus, there is increasing hopes that the vaccine will come along. But still, for the United States, for the ninth day, the deaths are averaging higher than 1,000 a day. So if you look at the entire U.S. economy, it's a bit of a question why the stock markets are doing so well. But if you look at some details, there are, I think, some pieces of news that investors are taking optimistic notes from. For example, the Fed has promised to continue low interest rates and keep buying corporate bonds. And while Congress has not agreed on a stimulus package, some details are coming out. And among the details seems to be that they agreed on having an additional $1,200 payout to most households. Unlike Korean emergency relief payments, some of the richest households will be shut out of this $1,200 payments. But the $1,200 payments will have a lot of effect on demand, and they seem to be coming around to the view that the $600 additional payment for unemployment insurance is desirable. A lot of Republicans were against that, but they seem to be coming around the view as well. And then the tech side has genuinely good results. Because of the lockdown, because people are afraid to go out, because people are working from home, tech companies are doing very well, and that's showing up in tech stocks. The S&P Tech Index has already went over the previous all-time high. So that kind of optimism seems to be driving not only the tech stocks, but the other stocks as well.
Well, here in Korea, the KOSPI rose above 2,300 points today for the first time this year. A lot of individual investors buying in. What was driving that trade today?
Okay, well, for today, there hasn't been a whole lot of really good news in the last couple of days for Korea as well. There hasn't been that bad news, but there has been that much good news as well. So the results are being attributed to the United States stock markets doing very well, and Korean KOSPI getting very close to and going over 2,300 today. But if you look at other Asian markets, while China and Hong Kong is up, the Nikkei of Japan is down, and the results are fairly mixed, but partially because of the U.S. stock market, partially because the Korean economy, while it's doing badly, it's getting more optimistic that Korea can beat the coronavirus. It seems to be driving the market higher as well. In the KOSPI market, the individuals bought stock today went up 1.4%, but in KOSDAQ market, KOSDAQ also went up by 1.43%, but individuals sold in the KOSDAQ case.
Well, as many have been saying it would, the price of gold has risen above $2,000 an ounce. Some are saying it could even go to $3,000. What do you say about gold, Professor?
Okay, well, gold, at least in the short term, has the potential to go higher. Now, gold is now at, if you look at the nominal prices, it is at the highest level that it's ever been. The previous high was in August 2011. The closing high was $1,891. Intraday was $1,923, but current prices have beat that. But if you take the inflation-adjusted price, then it hasn't hit the historical high yet. The inflation-adjusted price at the intraday peak was $2,640. So it hasn't hit that much high yet. The reason that people are moving into gold is, I think, because, well, in most cases where there's economic instability, global financial market instability, people flee to safe assets. That includes government bonds and gold. So the people are flowing down to gold. This is somewhat predictable. As to how far it would go, investment banks are targeting prices between $2,000 and $2,100 by autumn, but the current numbers show that the gold price rise seems to be moving even faster than what the investment banks predicted. Goldman Sachs targeted gold price of $2,300 per ounce by July next year. And Bank of America, their price target is $3,000 by the end of 2021, end of next year. While I think the gold prices still have room to go higher in the short run, I'm not sure if I would trust these longer-term targets by the investment banks because, well, because of the coronavirus, the global economic future is so unpredictable. If there is a cure for coronavirus by the end of the year, if there is a vaccine, or even if the coronavirus comes under control, I think you'll see gold prices dropping like a rock. But if the coronavirus problem continues, then we'll see gold prices going even higher.
Well, it'll be interesting to watch, Professor. Thanks so much for sharing your insights today. We always appreciate it.
Thank you.